everyone, it's Christiana Morales. I am so happy to be here. We are working our way through the complete guide to self-determination program, the enrollment process. So, believe it or not, we're all the way up to episode 6, Intro to the Financial Management Service. So, if you're not familiar yet with what a financial management service is, the financial management service is the one who's going to be paying your bills in this program. If you've been working along with us, we are almost all the way through the process. So hopefully you have already attended your orientation, found your supports, done your person-centered plan, your budget, your spending plan, and now you're thinking about finding your financial management service. So you are here. So this is the right place. You're going to find so much information on how to find the right one for you. I start every meeting by talking about the principles of self-determination because it's so key to what we are doing here. The importance is that everybody, people with a disability, have freedom, authority, responsibility, support, and confirmation over their lives. And these sound like simple things, but they are not always provided to people with disabilities. So the importance of self-determination is not just about the program and the services you can get through it, but the overall philosophy of the civil rights of how important self-directed services are for people with disabilities. What are we going to learn today? So today we're going to talk all about financial management services. You're going to learn what one is. There are 3 models you can choose from when you're picking your financial management service. We're going to talk about what those 3 are and how to select that model. And how are you going to choose the right financial management service to fit your needs? Okay, let's just start with what is a financial management service? You'll hear the term FMS quite often. It's one of those acronyms you're going to hear all the time. This is the only required vendored service that you must have in the self-determination program. The reason that this is a vendored service is they work with your regional center and they are going to be the ones who are paying for all the services that you have. So you cannot pay for anything in self-determination program outside of this. They are the ones who pay all of your bills, hire employees, all of those things. Every financial management service, I think we're up to somewhere between 28 and 30 financial management services. Not every single one works with every single regional center. So you will need to look to find out which one is working with your regional center. And as I just said, all of the money from your budget is going to be paid through by the financial management service. And they do a lot of other things too. They're going to help make sure that we're following the labor laws, all kinds of things. So you're going to, as we go along, realize how they're really going to be the partner with you in your self-determination program. And what I will say is, this is a very important choice for you because the better fit that you have with your financial management service, the easier your program is going to run. And we're going to talk about what that fit is and how to choose one and make sure you're with the correct one. Also, no, you can always change. If you find that, don't panic. Don't think you have to make the perfect choice and you're going to, have to know the exact right one when you're starting out. Maybe one will start and meet your needs, and then your needs change, and you realize, oh, another financial management service would suit me better. So it's totally okay to know that you can change. So let's talk about the role that the financial management service has. So they're going to help you keep track of your spending and make sure that you stay on track so that you will get a monthly report that tells you how much you had available, how much was spent, and how much you still have available. They're going to pay your bills and your workers and purchase goods for you. They are going to manage all the taxes and insurance and help you make sure that you're following the labor laws. They're going to check that workers have the correct qualification and background checks, and follow all of the what we call Title 17 DDS rules. So because these are Medicaid dollars and because these are paid for through government funds, there are specific qualifications people must meet in order to be paid through this agency. So think about it like there are just rules that have to follow. So when we talk about freedom in the self-determination program, we're talking about freedom within boundaries. There are things that you can pay for, lots of things, and there are a lot more freedom and flexibility in the self-determination program, but there are boundaries and there are things that you cannot pay for. So, and then the last one is they're going to keep the financial records and make those spending reports for you. Okay. Now you're going to hear this term a lot. What model are you in? And what this means are there are three models that you can choose within a financial management service. Know that every financial management service does not necessarily offer all three. So you're going to kind of determine, you're going to look at your spending plan and your budget and determine which model do I want? Which model am I going to need to meet my need to make my get my needs met? And then when you look for financial management services, you're going to find one that offers that model. So the three models are one is bill payer, two is co-employer, and three is sole employer. So let's talk about each one and what that means. In the bill payer model, you aren't directly hiring employees. Now, that doesn't mean you can't have people working for you, but the people working for you would be hired through an agency or a business. You aren't directly hiring them. Um, this model has the least freedom. It has the least flexibility in it because you kind of have those same issues that you may have had in the traditional system when you used an agency and they sent out who they wanted to hire you. They also, those agencies, have administrative costs. And so you are paying for those administrative costs, and they typically may be setting the rates for those employees. Not all of them, but some of them may be setting those rates. So the bill payer model definitely is the least flexible, least uh, self-directed of the three models. Again, you are not required to use vendor services. So don't think because we're saying that you're not hiring them directly or you're using providers that you have to use regional center vendors. You do not need to use regional center vendors. As long as they meet those requirements, and we're going to talk about those in a moment, what those are, um, then you can hire any type of vendor. You could hire any staffing agency, or maybe there's a respite agency that's not from your area, but you happen to like better. So think of it that way. And then also know that the financial management service is going to pay for all goods and services. So if there's something you want to purchase, there is no reimbursement in the self-determination program. And so the financial management service needs to purchase any of those goods. And it could also hire services. So if you have a camp or a class or something like that that you want to pay for, you could do that. So the key to bill payer model is you aren't hiring anybody yourself directly. So you're just working with businesses that might hire other people. Okay, now we're on to the second model. This is the in between. It has more flexibility, more choice, more freedom than the bill payer model, but it still has a few limitations. And this is called the co-employer model. And what that means is the financial management service that you are working with is going to hire who you select as an employee on your behalf, on the participant's behalf. Now, why is this different than sole employer? Well, because the financial management service is the employer of record. It's kind of a formal term they use, but saying they're the ones hiring them. So that means any rule that they have for their employees is going to apply to yours because they're hiring them for you. So they may have rules around they won't permit an employee to work with multiple people, right? Multiple participants because they're worried about overtime. Well, if they go into overtime, does the second person have to pay the overtime? How does that work? So they may say, well, uh, this really becomes an issue when we've got siblings or roommates or people who have a friend who's also in the program and they want to share service providers. This becomes an issue, right? If they say they can only work for one participant. Um, They could have other rules that specifically apply to just their employees. And one might be it doesn't matter whether you are required by law or not to have a background check, they want everybody to have them. And that's something they are permitted to do because they are their employees. Um, you still have flexibility here. So you are going to choose who you want to hire if you want to let them go. And you will be scheduling the services. You'll be scheduling when they're coming and going. They will not help you find somebody like post ads, do those kind of things. You are responsible for doing that, even in the co-employer model. So while this has a little bit more um, rules around it and that they have to follow their employer's rules, you still get a lot of choice. You'll also get to decide what rate you're going to pay them. Um, so also know in the co-employer model, if your financial management service offers health insurance, then you would have to offer that health insurance to the participant. Now, in California, health insurance must be offered after 50 plus employees. So a financial management service could easily reach that number and be required to offer health insurance. Now, you as an individual employer probably aren't going to reach that mark, so you wouldn't be mandated to offer health insurance. So just be aware. If you're in the co-employer model and you choose this model, you may need to add health insurance or those costs onto your spending plan. So keep that in mind. Now, let's go to sole employer. Sole employer has the most freedom, has the most choice for you, and that means the participant, if they're an adult or their loved one, would be the employer of record. They are hiring that person. Now, don't worry. The financial management service is going to get all of the information from you in order to become that employer. So you don't have to worry about those pieces. But it's kind of more of an important where the tax status, who is the employer. But that also means that you have more freedom. So, like those overtime rules won't necessarily apply to you. Having health insurance won't apply to you because you're not going to have 50 plus employees. But you could choose to offer health insurance to your people. So, it does see, this is what I mean by you have a little bit more choice in the sole employer model. Now, in the sole employer model, depending on the financial management service, you may have to get your own workers' comp, or it may be included with the financial management service. Um, in co-employer, they're going to be on their workers' comp insurance. In sole employer, it just depends on the financial management service, how they deal with that. The participant gets to choose who to hire and who to let go, what rate they're going to pay them, just like in the co-employer. Something that's a little bit different here is there is a requirement that anybody who provides personal care services must get a background check. And that is a federal rule. You have to do background checks. But if they don't do personal care services, then it is up to you. As I said, in the co-employer model, hired by the financial management services, most of them require everybody to have them. In the sole employer, if they are not doing personal care services, you have more flexibility to choose. If this is somebody you know very well, you don't believe that you need to do one. I am actually all for background checks, but I also know they can take time and it can make it harder to hire people. And if it's a family member or somebody you know very, very well and you don't believe that you're going to need it and they don't provide that personal care service, then you have a little bit more flexibility. And also, as we said, in the co-employer, you may not be able to use the same employee with multiple clients. In the sole employer model, you would be able to. You would still need to work out how that overtime works. So here's a little chart because I like charts. I know my head's in the way a little bit, but you will be able to download these slides and you can get this chart. It's a little cheat sheet. I like cheat sheets of just what I basically said, comparing the two, co-employer and sole employer. So I didn't put bill pay on here because that's the most obvious. If you're not going to hire anybody directly, you know you're going to be in bill payer. If you are going to be hiring employees, then you're going to be in either co or sole. And here's where you get to compare the two models. I know this isn't confusing, and I know you may not know right off the bat which one you're going to do. You can change models if you want to. Again, not every financial management service offers both models. So if you want to change models and they don't offer it, you might have to change financial management services. But nothing's ever written in stone. There is flexibility in this program. So let's say you start out co-employer and you want to move to sole employer, or vice versa. You can do that. The one piece of advice that I will typically give is currently in the state of California, a minor cannot be an employer of record, meaning they cannot be the one who hires the people. This gives me a very large concern because if you had a parent as their employer of record and something happened to their parent, not only would they lose their parent, but they would lose all of their services because their employer passed away. So I believe that the services really need to stay with the person who is receiving them. And since in California it cannot be the minor participant, I typically recommend co-employer model for minors. If you have any more questions, and I'm sure you do, because this is very complicated, this is really where your independent facilitator, those transition support people can help you really determine. And you're really going to know this model. The part of the reason we put this kind of late in the process is you kind of have to have your spending plan set. You have to know who am I hiring? What are my plan? What's my plan going to look like? What's my week going to look like? Who are the people that are going to be assisting me? And then you'll know kind of better which is going to be a good model for you. Now, when you hire somebody and you pay them, there are two types of taxes that are paid. I didn't actually know this. So I have a son who's in his fifth year self-determination program that as an employee, I always saw the taxes that were taken out of my paycheck. Those are these bottom ones that we see over here. The employee check, and those are affected by the W-4 form that people fill out. W-9 form that people fill out, and that's how they determine how much is going to be deducted from your paycheck. Now, there's more taxes that are paid on the employee's behalf, and those are called the employer taxes. So your employer kind of splits the amount of taxes that you owe, and those can be things like federal income tax and state income tax and all of those things. And so how this comes about and how you get this into your plan to make sure that this is being paid is the financial management service is going to give you a percentage. And they call this percentage the employer burden. I don't know, burden sounds kind of like it's this terrible thing, but it's actually a good thing because you're helping pay the taxes for your employees, which we love our employees. We want them to be happy. So we are helping pay some of the taxes as their employer. And so the financial management service will give you a percentage. So let's say you're going to pay somebody $20 an hour, and they say the percentage is 20%. You would add 20% onto that $20 per hour, and that would be what you would put on your spending plan. So you know that's the total dollar amount it's going to cost you. So it costs you a little bit more than the actual hourly you're paying them on your spending plan. One of the things that is mandated is anybody who has even one employee has to have workers' comp insurance. And this is one of the things that every financial management service is going to take care of for you or work with you to do it. In the bill payer, each of the providers, so remember, we're not hiring employees, those providers are going to have their own workers' comp. So you don't have to worry about it in bill payer. In co-employer, that financial management service who hired your employees, they will have their workers' comp for their employees, and that will be included in that employer burden rate. And that's how you will have your workers' comp insurance. In sole employer, it will depend on your financial management service, whether they are putting you under their umbrella and just letting you buy into their workers' comp, in which case it's part of that employer burden rate, or some of them may have you purchase your own workers' comp. You'll get your policy and you put it on the spending plan. Now, I'll tell you that initially when I heard that, I'm thinking, I'm never doing that. That sounds horrible and scary. I ended up doing it. It was very easy. It was not hard. It was sounds way worse than it is. totally doable. And your financial management service is going to be there. They are your partner in all of this. They are going to help you all along the way. We talked a little bit about this already. Health insurance. Health insurance must be offered in California to any employer that has 50 plus full-time employees. M- Many, not all, of our financial management services meet that requirement, in which case they must offer health insurance. Some of our financial management services are growing and they may hit that number while you're with them, in which case then you will need to add that health insurance to your spending plan. That has happened before. So keep an eye on that. Ask them, is it already included? Is it something I need to add on to my spending plan? Plan for it ahead. So you know that you don't, you're not mid-year and they say, oh, now we've hit our 50 plus employees and we need to add, and you're not caught off guard. So keep this in mind. And these are things that why you want to be talking to your financial management service a lot and keeping in touch with them. So now one of the big pieces that's really difficult for people to understand is when is somebody an employee and when are they an independent contractor? And I've actually had people who came to me and say, I don't want to be an employee. I want to be an independent contractor. The thing is that we don't get to decide that. California is really, really strict about that. And I'll tell you why. Remember, we talked about that employer burden rate, the employer taxes. They don't want employers to shuffle people off to saying they're contractors when they're not, because then those employees have to pay all those taxes. So they want employers to pay their fair share of those taxes and that employees, if they are actually employees. There is something called the ABC test. You don't have to know what it is or how to do it or anything because your financial management service is going to do that. So when somebody, you say, I want to hire Christiana to work with me, and I go to them and say, I don't want to be an employee, I want to be an independent contractor, they're going to do the ABC test to determine, am I really an employee or am I an independent contractor? An independent contractor sets their own hours, they have their own tools, they have a business name, typically a business license. So that's what an independent contractor typically looks like, and they invoice. They don't get payroll. They send in an invoice and they would get a 1099 at the end of the year. An employee is hired by them. They have timesheets that they fill out. But those are most of our employees are going to be under that. If you're scheduling them, they're probably an employee. So don't get upset with your financial management service if you found somebody who wants to work with you and they say, no, 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 I want to be an independent contractor, but they don't pass that ABC test. Your financial management service is protecting you because there are fines if you you put somebody as an independent contractor who should have been an employee. There, you could be fined. So keep this in keep this in mind. We talked about the background checks already, but let's talk a little bit more about that. We already talked about who has to get the background check. Anybody who's providing personal care, or the financial management service says everybody has to have them, or even in the sole employer, you decide they're not providing personal care, but I don't know this person very well, so I want them to have a background check. You can absolutely do that. The employee must pay for that background check. This is a sticking point. I'll tell you, I'm not super happy about this. I understand why they did it because in the typical healthcare field, that is a normal thing to happen. Direct service providers often do that. But in the self-determination program, we're not often hiring people who are necessarily from the healthcare field. We may be hiring anybody, right, to do some of the jobs that we have. And so they're not used to paying for that background. Unfortunately, it's written into the law that the employees must pay it, and there isn't a mechanism to pay them back or any of those things. It is required that that employee pays for it. Now, some families will, if they have enough money, will say, you know what, I'm just going to pay it for them. And that's okay. You can do that. But in general, it is the employee's cost. And then we already talked about What are the things you need to plan for when you put an employee on that spending plan? You say, I hired somebody. I want Christiana to work for me. So not only is it $20 hour, but you've got that employer burden rate. Think about overtime. Um, Overtime happens. So plan for some of it. Even if you think they're not going to do what they're scheduled so well, somebody's going to get sick. Somebody might quit and the other person has to cover and then they go up into overtime. So it's important to put a little buffer in there. Somebody's going to be late. So put a buffer in so you have overtime covered and mileage. If they drive, they must be paid for mileage. It's labor law. Okay. How do we find the right financial management service? Right? This is going to be the key question, right? You're probably having like, oh my gosh. Well, as I said, not every financial management service works with every regional center. So start by finding out which ones work with your regional center. You can find that by going to the DDS SDP website, and they have a list of the financial management services and who work with each regional center. Now, I'll tell you, sometimes that list is not as up to date, so you can also ask your service coordinator. Who are the financial management services that are vendored with our regional center? Now, the other thing is you might find a financial management service you want to work with who isn't vendored with your regional center, but they're willing to courtesy vendor, which means they can sign up to work with your regional center. You are welcome to do that, and they can sign up to work with your regional center. Plan extra time. If they're going to do that, the time it takes them to courtesy vendor will add time on you enrolling in the program. So if you were in a hurry to get in, I would select one that's already working with your regional center. Um, the other piece is that some of the financial management services have what we call a budget cap, the highest dollar amount they will accept of a budget. So some of them might have $150,000. Some of them might have a $500,000. Some might have no budget cap. So you want to ask them, based on the budget size that you have, does the financial management service have a cap? So if yours is higher than theirs, then you kind of can help rule out some of the financial management services, right? So we know they work with your regional center and they take a budget the size that you have. The next piece is going to be look at the services that you have in your spending plan. This is why I kind of put it off towards the end to select your financial management service, because what you want to know is what types of services you have in your spending plan, because one, it's going to help you pick your model. At that point, then you can also ask them, what models do you offer? And might have chosen yours already and say, okay, this is the model I want to use. And there might be other things that you want to pay for. So let's say you would like to have a credit card that you could leave on file. So if you have something like a gym, often they will say, we need a credit card on file. And not all financial management services will do that. So look at the type, and if you don't use a gym and you don't have that as a need, then that's not an issue for you. So this is what I mean by you want to make sure that you are picking a financial management service that's going to meet your needs so you can access those services in your plan. So do you need things paid for by credit card? Ask them how they pay. Ask them how you turn in your invoices. Ask them how your employees clock in and out. Maybe most of your employees are not technical people. Like they are not going to be able to use a cell phone to clock in and out or an app to clock in and out. So then maybe you want to use a financial management service that doesn't use that type of time tracking, right? Or let's say um, you prefer having somebody you can pick up the phone to call. That's the type of customer service you like. Or maybe you're somebody who's like, I don't want to talk to anybody. I want to just have a platform where I can just see any time, 2 in the morning, I want to see where we're at. I want to go look at the platform. So those are things you want to think about when you're picking your financial management service. So you get the one that's going to work for you. We have a list of questions on our site. There is a link here. And So you can go through those questions to help you find that financial management service. There's also a list on sdpprovidernetwork.org, and that link is right here. And again, you can download these slides with the links on it. And this one will help you get more information about each of the FMSs. If you don't want to call all of them, go ahead. This is our website. You can go look at it. It has tons of information about those financial management services, what their caps are, if they're taking clients right now, what their models are, who they're working with. So this is a great reference for you. The other place we talked about already was that DDS, the Department of Developmental Services, SDP website. And when you click on this link, it will take you and you will see about 6 boxes, and one of them says Financial Management Service. Click on that one, and then you will be able to select your regional center to see which ones work with your regional center. So that is everything that we could think of to talk to you about financial management services. Stay with us. Our next meeting, we are going to talk about that final transition. A lot of times we forget, oh, all the last minute things that have to happen. So you've picked your financial management service and you're ready to go in. You're like, okay, start date. Well, there's a lot of things you want to do to make sure you're ready to start on that day. And we're going to be talking about that at our next meeting. I hope you enjoyed, and we will see you soon.